Cryptocurrencies have been having a turbulent time in recent months and have taken a hard hit. But you know what else has witnessed a rather shocking crash since cryptos got hit? The luxury watch market. For the first time in 2 years, the price of both new and used luxury watches, particularly those that are sold in the secondary markets, have witnessed a heavy decline. Reputable brands like Rolex and Patek Philippe have been hit hard and have seen some of their most prized timepieces lose tens of thousands of dollars in value. With this decline persisting even further, all stakeholders are actively on the lookout for what's to come next. We'll be covering just about every detail of this crypto crash and how it's turned the watch market on its head, so make sure you keep up. Aside from new luxury watches, used watches, particularly from Rolex and Patek Philippe, have seen a massive meltdown in their value, largely due to the downward spiral of the crypto market. This ongoing and persistent decline is a sharp contrast to what is usually the prevailing situation in the luxury watch market. The last 2 years have particularly been very spectacular for luxury watch dealers and flippers, as this was a period during which the average prices of luxury watches, especially second-hand timepieces, surged amid the rise in stock and crypto prices, as well as the numerous stimulus checks from many governments across Europe and America. Second-hand timepieces of the most famous brands, otherwise deemed the holy trinity of luxury watches, were especially sky-high. The Rolex Daytona, the Patek Philippe Nautilus, and Audemars Piguet Royal Oak hit major highs during the peak of the crypto market. These 3 watches were constantly fetching their retail prices many times over. Their inflated values were likewise largely sustained by the war in Ukraine, which also greatly pushed the prices of luxury wristwatches high, especially as buyers sought tangible stores of value and alternative investment avenues. Additionally, with the global economy plagued by uncertainties and a looming recession, alternative asset classes like luxury wristwatches did indeed become more desirable. The entry of a new crop of buyers into the market, including the Gen Zs, also helped keep the demand for these watches high and caused their prices to respond in like fashion. During this peak period, the market saw a huge influx of new money, with money made from trading crypto accounting for 25 to 30% of the astronomical growth in sales witnessed during this period. Aside from commanding very high prices, some of these brands' most exclusive models also got auctioned for insanely exorbitant amounts. For context, Paul Newman's very own Daytona got auctioned off during this boom period for a whopping $17.8 million. The famous actor and celebrity car racer is widely acclaimed to have made the Rolex Daytona globally popular during his active acting days. A 1990 Patek Philippe watch has set an auction record around the same time after it outdid its pre-sale estimate during the Philips tender in Hong Kong. The watch, which was initially expected to fetch around $829,000 in auction, ended up being sold for a staggering $2.5 million, officially making it one of the best performers at watch auctions held to date. The big 3 watches, as well as the luxury watch markets in its entirety, have now fallen from grace. The holy trinities of luxury watches are now trading at 25% below their peak values, and as prices continue to plummet, there are fears that the values of these watches might even fall below their 2019 valuations. From expert reviews, the market for luxury watches is the first luxury sector to feel the effects of crypto's collapse, and is unlikely to be the last. While this unusual crash is being largely led by the decline in the crypto market, the general downturn in the stock market, as well as the persistent rises in interest and inflation rates, are likewise contributing to the sharp decline in luxury watch prices. The prolonged and continuous absence of many Chinese and Russian buyers from the market, especially due to the recurring lockdowns in China and the prolonged war in Ukraine that has seen the assets of many of Russia's wealthiest citizens seized, is another contributing factor. Their absences have particularly made demand levels plummet very badly, invariably causing the persistent falling prices. As already being envisaged, the prices of similar luxury goods like designer handbags, sneakers, and other wares might begin to see a similar decline, especially as their recent increased demand levels were likewise largely fueled by the same factors that fueled the watch market, particularly the crypto boom. The prevailing situation of falling prices in the luxury watch market, however, has a bit of a twist to it. While the prices of many watches lost immense value in quick succession and in a manner that's threatened to ground the market, This trend has left out very rare watch models which so far remain completely unaffected. These truly exclusive and very rare watches are on the contrary seeing high demand and have either maintained their prices or even gained more value. Aside from the big three, other luxury watch brands like Cartier, Omega, and Duda, whose timepieces have only shed a little value during this ongoing market turbulence, are also now witnessing situations of supply exceeding demand for some of their models. Demands are, however, expected to continue to weaken throughout the year, being majorly caused by the same factors that have fueled the massive price slashes in the last couple of weeks. Interest rates are still high, and inflation rates have risen to stagflationary levels. Buyers in China still have to endure renewed lockdowns, and Russia's war in Ukraine still doesn't have an end in sight. From expert reports, the decline in the sales performance of these watches officially marks the end of the sales frenzy that has predominantly dotted the post-pandemic period. To put the prevailing situation in the market into perspective, the Rolex Daytona Black Dial watch that rose to as high as $44,500 earlier this year from its recommended retail value of $12,400 is now presently trading at around $35,000. In like fashion, used Patek Philippe Nautilus watches are presently valued at around $190,000, a significant decline in value from the high $237,700 for which they traded earlier in the year. The ongoing situation has been particularly perplexing for retail investors who also actively seek to make gains from trading the luxury watches. With prices down, it'd be very easy for them to pick up Rolexes or any other luxury watch of their own at the moment. But buying a watch isn't the problem at the moment. The bigger and actual problem is on the flip side, as the present state of the market has largely disincentivized many flippers from buying up new watches at retail. This rather delicate situation makes it extremely difficult for retail investors to resell their new watches in the secondary markets or make any gains from reselling, especially as prices continue to plunge further down. This situation generally leaves the market stagnant and will make it even more difficult for the market to return to full steam anytime soon. As the situation stands, experts are already taking a closer look at available data and making comparison between the latter half of this year that has seen the market lose a lot of value and the latter half of 2021, a period during which luxury watches soared to some of their highest levels and revenues skyrocketed as well. There have been speculation that there might be a large influx of Americans into Europe this summer, especially as many Americans seek to take advantage of the strong US dollar in cutting down on some inflationary pressures they've had to endure for several months running now. But how exactly this impacts on the state of the luxury watch market remains unclear. Would buying enough luxury watches in Europe help cushion the fast falling prices in the American market and possibly get the market trending positively again? Or would the loss of value ongoing in the American luxury watch market continue nonetheless? What's most certain is that only time will tell if the watches make a quick comeback, or if the threat of a looming recession hold true and successfully take out the luxury counterparts of these watches next. But experts continue to project that the market might gain largely from a revival in China, especially after the stocks of many luxury brands increased briefly after the Chinese government eased quarantine rules earlier this month. An end to the war between Russia and Ukraine is likewise envisaged to have similar stimulating effect in the market, as many of the Russian oil moguls who are presently keeping a low profile in an attempt to avoid further sanctions might also return to being very active in the market.